Hello everyone and welcome back to the channel. Before we begin, here are today's top crypto headlines. Bitcoin remains under pressure after a sharp weekly decline. More than $1 billion in crypto positions have been liquidated. Bitcoin ETF outflows continue, signaling weak institutional sentiment. Ethereum falls below key psychological levels as traders remain cautious. Analysts are divided on whether this is a market bottom or the start of a deeper correction. Now let's get into the details. The cryptocurrency market is facing another challenging week as Bitcoin struggles to regain momentum after a significant sell-off. Bitcoin recently dropped into the low $60,000 range before recovering slightly. The decline triggered widespread liquidations across the crypto market and increased concerns among investors about short-term market direction. One of the biggest reasons behind the weakness is continued outflows from spot Bitcoin exchange-traded funds. Institutional investors have been withdrawing capital from Bitcoin ETFs for multiple sessions, creating additional selling pressure on the market. According to market data, Bitcoin ETFs have experienced billions of dollars in cumulative outflows during recent weeks. Several major funds have recorded significant redemptions, indicating that institutional confidence remains cautious at current price levels. Another factor affecting sentiment is broader market uncertainty. Investors are closely watching economic data, interest rate expectations, and geopolitical developments that could influence risk assets, including cryptocurrencies. Ethereum is also facing pressure. The world's second-largest cryptocurrency recently fell below the $2,000 level, a key psychological support area for many traders. Market analysts point to continued ETF outflows and weak risk appetite as major reasons behind Ethereum's decline. Despite the price weakness, long-term Ethereum supporters argue that the network continues to dominate decentralized finance, smart contracts, and blockchain application development. However, traders remain focused on short-term price action and are waiting for stronger signs of recovery. Moving to the broader market, crypto liquidations have surged dramatically. Recent data shows more than $1 billion in positions being wiped out within a short period as traders using leverage were forced to exit losing positions. For viewers who are new to crypto, leverage trading allows investors to borrow funds to increase potential profits. However, when the market moves in the opposite direction, losses can accumulate quickly and trigger automatic liquidations. This is one reason why market declines often become more severe than expected. Meanwhile, some alternative cryptocurrencies are showing relative strength despite the overall weakness. XRP-related investment products have reportedly attracted positive inflows, while several Bitcoin-focused funds continue experiencing outflows. This suggests that some investors are selectively moving capital rather than exiting the crypto market completely. Regulation also remains a major topic. Governments and regulators around the world continue discussing new frameworks for digital assets. Investors are closely monitoring developments because clearer regulations could encourage additional institutional participation in the future. Now let's discuss what traders are watching next. The first key factor is ETF flows. If institutional investors begin returning to Bitcoin ETFs, market sentiment could improve quickly. The second factor is Bitcoin's ability to defend major support levels. A successful defense could strengthen the bullish case, while further breakdowns may increase selling pressure. The third factor is Ethereum. Many traders believe Ethereum's performance over the next few weeks could provide important clues about the health of the broader crypto market. Finally, market sentiment remains extremely important. Historically, periods of fear have sometimes created attractive long-term opportunities. However, experienced investors understand that markets can remain volatile longer than expected. Looking ahead, opinions remain divided. Some analysts believe the worst of the correction may already be over and view current prices as a potential accumulation zone for long-term investors. Others remain cautious and warn that continued ETF outflows and weak market sentiment could lead to additional downside before a sustainable recovery begins. In conclusion, the crypto market remains at a critical point. Bitcoin is under pressure, Ethereum continues to struggle, ETF outflows remain a concern, and traders are closely monitoring support levels across major cryptocurrencies. The coming weeks may determine whether this correction becomes a long-term buying opportunity or develops into a deeper market downturn. That's all for today's crypto update.